is taking place or it's taking root, and that's something that's going to have an impact on the oil price. And also a very interesting thing about oil is that the role of investors, or another word for investors that people use which is less positive is speculators, is important. So historically, decades ago, the oil price moved according to supply and demand. And so the people who bought oil, it was because they needed it. And now that's changed. So you have obviously commodity traders, you have hedge funds, you have the like, and that's had a distortionary effect, certainly on the volatility of the oil price, moving it very high and moving it very low and back and forth. Okay, so what happens to this wealth? Well, the wealth comes, so to put it very, very simply, if there's a surplus generated on the oil and gas revenues from a Gulf government, then what happens to that wealth? There is a framework which obviously differs from country to country, but there are 4 main players you find in every country, and each of them has an important role to play. So the energy companies I mentioned already, they're the ones who actually generate the profit, and then they have they're the operating companies, and they're extremely important. Saudi Aramco, as I'm sure many of you know, is the largest oil company in the world, and it's the most important. And so that's part of the framework. Then if you look at the kind of level beyond that, you've got the ministries of finance and you've got the central banks. So what happens is, depending again on the country, when there's a surplus, that the Ministry of Finance is responsible for financing the budget, right? So the way you finance a budget is either through income. In our case, we have the Treasury and the IRS and other sources. Or, of course, you can issue debt in terms of bonds and other instruments to raise capital. Now, in the Gulf context, there's as I said, has been over the past decade a very strong pattern of surpluses. So the ministries of finance are enjoying a significant surplus, so they're meeting their budget, then there's extra money left over that's sort of divvied up between ministries of finance and central banks. Central banks hold on to the money to keep the currency stable and to provide kind of some safe keeping for that wealth. So the ministries of finance are more concerned about the if you will, operating the country and running the government, and the central bank is more concerned about keeping the economy stable and protecting the currencies. And then, of course, you've got the sovereign wealth funds and the investment vehicles. So what happens is, when there's a surplus, the money is divvied between these 3 types of institutions: the ministries of finance, the central banks, and the sovereign wealth funds, as well as the other government investment vehicles. And one of the most important and interesting trends in the region of late are the development of what I call these specialized government investment vehicles, which are very different from sovereign wealth funds, in the sense that sovereign wealth funds are concerned principally about preserving wealth, and growing wealth, of course, is also an objective, but the key objective that they have is to preserve the wealth. And in that respect, they're a lot more like trusts. And in fact, one of the things I talk about in the book is that this term sovereign wealth fund may not be a very accurate term, at least in the Gulf context, and it's more, I think a better term perhaps, or a more accurate term would be national trusts. And the reason why they're national trusts is that, number one, they exist for the good of the nation, and there's a very kind of explicit mission around that. My favorite sovereign wealth vehicle is a Kuwaiti entity that was started in the 60s, and it's great because, I mean, its name just sort of tells the whole story, and it's called the Kuwait Fund for Future Generations. So the idea is that the Kuwaiti government saw that the people of Kuwait were enjoying a very high standard of living. They wanted that standard of living to continue for the unborn, future generations of Kuwaitis. So that's what the purpose is. So it's more like a trust or a trust fund than it is anything else. And the other thing, for those of us who work in investments, we know there's a very specific meaning of the word fund, or the term fund. So funds have certain structures, funds have managers, funds have defined lives, funds have strategies that are not changing for the life of the fund. And that's not what we find with these sovereign wealth vehicles. So anyway, that's a basic architecture of the institutional framework. The 4 categories, and I apologize, this slide is taken straight from a chart in the book, so it's not very easy on the eyes. But just to give you a glimpse of the 4 categories that I explore in the book, we have the generalist sovereign wealth funds. Now, these are the ones that I said are better described as national trusts, because they exist to preserve and grow wealth. The source of wealth, of course, is the public sector. That's where the money comes from. Very conservative investors. They generally use external managers. So they'll have a strategy, they'll have an allocation, but the bulk of the management of the funds is done outside. And the most famous of these, of course, is the Abu Dhabi Investment Authority that I cited. If you look at the specialist government investment vehicles, and these are some of the ones that are making the most interesting acquisitions these days, they have kind of a dual objective. One is to grow national wealth, which is important, but their method for doing it is through more strategic kinds of investments. So, for example, Mubadala, which is an Abu Dhabi investment arm, is making investments in things like the auto sector, in other parts of transportation, like they own a Swiss aircraft repair company because they want to get into that space. They're investing in things like refrigeration, so heavy duty refrigeration, industrial capabilities around that. So they're making investments in areas that are strategic for Abu Dhabi, and they're trying to bring capabilities into Abu Dhabi that are not presently there, while at the same time, of course, trying to generate a return. But there's a very different philosophy or mindset. The investment strategies for these specialist vehicles tend to be defined by sector or by an investment type. So again, Mubadala does more investment in technology and heavy industry, and it does private equity investment, so it takes significant stakes, and that's why you hear about them, because when they make these big stakes, they're typically disclosed, they're in the public, and it's a much more prominent vehicle. There are other vehicles that make investments as well in particular sectors or particular modes of investment. And it's important for the sovereigns, as they've kind of developed this constellation of different institutions, it's been very helpful for them because they get specialist capabilities in the right places. And the challenge has been trying to coordinate these vehicles, or at least have some semblance of coordination, so you don't find them sort of bidding up each other and jacking up asset values for the country. Then you've got private investors or private institutions, and there you've got a wide range, of course, of private investors. But the ones that I categorize as the private institutions, these are the ones who are investing their own money. So these are either families or these are corporations that are investing their own wealth. And some of them do it very passively, some of them do it more actively. The important thing to remember is that most wealthy families that you find in the Gulf are business families. So if you look at the family balance sheet, you'll find that the biggest assets are the companies that they own and they operate. And what's happening sort of demographically and driving a lot of this is that there's a sort of leadership shift. And the founders of these businesses are coming of age, their children are coming to this stage where they can take over these businesses. They're inheriting companies and they're saying, well, I'm inheriting this portfolio of 4 businesses, 3 of them seem to fit, 1 of them doesn't really kind of go with the others. So they're looking to either exit those businesses or to bring on external shareholders and capture some of the value. So that's what's happening on the private side in terms of private institutions. And then you've got investment houses. And these are the third-party managers of funds. So Investcorp, I mentioned, which is Bahrain-based, quite a well-established firm from the 1980s. You've got a whole lot of new ones. You've got one called R Capita, which is a Bahrain-based Sharia-compliant investment firm. Investment Dar in Kuwait, which is a private investment firm. Global Investment House, again, a Kuwaiti institution, and many more. But this is a relatively new phenomenon, built largely around the surpluses and the prosperity of the 2000s. Now, private wealth, I wanted to put this slide up because when you think of Gulf investment, customarily we think about Abu Dhabi, Dubai, Qatar, Kuwait. These are the ones who are making the high-profile investments like, One Hyde Park in London, or Barclays, or Apple. Actually, Apple is Al Walid, but the prominent investments like the Chrysler Building, you see coming from these countries. However, if you look at the private wealth side, the Saudi market is by far the richest and the deepest investment, and so for the private equity firms like Carlyle and KKR and Bain, etc., they've known this for a long time. So they've had Saudi investors for quite a while. But the Saudi family investors tend to be a little bit more subtle in their activity and less direct and less oriented towards alternative investments.